welcome to EduTap and welcome to Finance 360-degree sessions. So today we are going to discuss two very important articles. The first one is regarding the Insolvency and Bankruptcy Code. The bill has been passed and now it has become the act. Okay, so the Insolvency and Bankruptcy Code Amendment Act we are going to discuss. So all about the bill we will discuss, that when it was initiated, when it was passed and such, and then you will see the important points, important facts that you have to remember from the insolvency and bankruptcy bill that has been passed. Now it has become the act. Okay, the next article is regarding the RBI that has cancelled the Paytm Payment Bank banking license. So why the cancellation has happened, what you have to remember, all of this we are going to discuss in today's session. Okay, so give me a thumbs up if I'm clearly audible and the screen is visible. So I hope there is no problem that is coming. Good morning, Avnish. Good morning, everyone. So the Insolvency and Bankruptcy Code Amendment Act as well as the next article, they both are important from the phase 1 perspective, as well as the Insolvency and Bankruptcy Code Amendment Act is also important from the phase 2 perspective. Okay, so let's get started. But before that, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, and do join our Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below. Okay, so now let's start with the session, the Insolvency and Bankruptcy Code Amendment Bill 2025. So on April 6th, 2026, that is in April only, the President of India gave assent approval to the Insolvency and Bankruptcy Code Amendment Bill 2025. And once the President gives the assent, the bill converts into the act. Okay, the bill becomes the act. So the Insolvency and Bankruptcy Code Amendment Bill, this was introduced in Lok Sabha on 12th August 2025. It was sent to the select committee so that there can be further analysis that can happen on this Insolvency and Bankruptcy Code Amendment Bill. And then the select committee provided its report on December 17, 2025. Then it was passed from the Lok Sabha, and then it was passed from the Rajya Sabha in April 2026. It was passed from the Rajya Sabha, and now the President of India has also given the assent, the approval to the Insolvency and Bankruptcy Code Amendment Bill 2025, and that's why it has become the Insolvency and Bankruptcy Code Amendment Act 2026. Okay, so this is the whole idea. First of all, that okay, it was introduced last year in the Lok Sabha, but it has been passed in this year in March from the Lok Sabha, and in April from the Rajya Sabha and by the President. So this is the basic idea. Now, what is the Insolvency and Bankruptcy Code? What is insolvency? Anyone has any idea that what is insolvency? See, insolvency is the financial condition in which the person, the individual or the company, the corporate, they are unable to pay their debt. They are unable to pay their debt. Okay, so that is insolvency. The person or the corporate has become insolvent if they are in the financial condition, in the financial state where they are unable to pay back their debts. Okay, bankruptcy. Now bankruptcy is basically the legal process through which the insolvent people, the insolvent corporates, they are under some legal process. Okay, so basically the bankruptcy, it is the legal process, or it is the court supervised process for those that are unable to pay their debts to handle the insolvency. So bankruptcy is the legal process to handle the insolvency. I hope this is very much clear, that insolvency is basically the financial state where the person or the corporate, they are unable to pay their debt. Okay, and they have become insolvent. They are unable to pay their debt. They do not have enough assets or enough financial flows right now to pay their debt. And bankruptcy is the legal court supervised process through which the insolvency is handled, or the insolvent corporates are handled. That is the basic idea. Now, so the Insolvency and Bankruptcy Code 2016, it provides a time-bound process to resolve the insolvency among the companies and individuals. For the companies, there is the Debt Recovery Tribunal. Sorry, for the companies, there is the NCLT. That is the adjudicating authority that looks after the whole process of the insolvency and bankruptcy process. And for the individuals, there is the Debt Recovery Tribunal. That is the adjudicating authority. That is the authority that looks after the whole process of the whole process under the IBC. This we are going to discuss more, okay? But remember that for the corporates, there is different process, or there is different adjudicating authority. There is different authority that looks after the whole bankruptcy process or the insolvency process, and for the individuals there is different adjudicating authority, okay? Now we will discuss more about this. Now the bill, that is the Insolvency and Bankruptcy Code Amendment Bill 2025, now it has become the act. It aims to address procedural delays, uncertainty in recovery outcome, and ambiguity from the judicial judgments. So there are major amendments that have been brought through this particular bill, through this particular act, so that we are going to discuss. But the bill aims to address the procedural delays, so the timelines have been very clearly noted, as well as there is uncertainty in the recovery outcome, that is also catered to under this bill, and ambiguity from the judicial judgments. So these are the problems that are catered to under this amendment bill, okay? Now first let's see the explanation. So under the IBC, under the Insolvency and Bankruptcy Code, a corporate insolvency resolution process, it may be initiated by a financial creditor. Financial creditors are those creditors that have given the loans, that have given the advances, right? It can be a bank, it can be NBFCs that have given the loans, that have given the advances. Operational creditor are basically those people that have given, like, let's say suppliers. Now the suppliers, they supplied the goods and services. They had to get the money, but let's say the buyer is unable to pay the money. So operational creditor are basically the people or the entities that own the money that the buyer has to pay to the supplier. So they are the operational creditor. Because of the business, because of their business, they have become the creditor in a way, okay? So financial creditors are the actual creditors that have given the loans or advances to get the interest, but the operational creditors, just because of their business activities, just because they are the suppliers or they are the sellers, they have got into this problem to take the money from the buyer, which the buyer is unable to pay, okay? Or the debtor itself. So the corporate insolvency resolution process, the corporate insolvency resolution process, this can be initiated by the financial creditor, the bank, the NBFCs, the operational creditor, or the debtor itself, that the debtor feels that now they are not able to, the debtor is not able to pay the loans, the debt. So the debtor itself can go under the corporate insolvency resolution process, so that the insolvency can be resolved. To initiate the corporate insolvency resolution process, an application is filed with the National Common Law Company Law Tribunal. So as I've told you that NCLT is the adjudicating authority that looks after the process of the corporate insolvency, while the Debt Recovery Tribunal is the adjudicating authority that looks after the whole process of the individual insolvency, where the individual or the partnership has become insolvent, they are not able to pay back their debt, okay? So here we will focus more on the corporate insolvency because that is a bigger domain, okay? So to initiate the corporate insolvency resolution process, an application is filed with the National Company Law Tribunal. So either the financial creditor, the operational creditor, or the debtor itself can initiate the corporate insolvency resolution process by filing a application with the National Company Law Tribunal, that is the adjudicating authority that looks after the whole process of this insolvency resolution. Upon default, now when the application can be filed, if the default of 1 crore rupees or more has happened, that means the corporate has defaulted 1 crore rupees or more than that, 1 crore rupees or more than that, then the application of insolvency resolution can be filed with the NCLT, okay? Resolution professionals, they are appointed to conduct. So there are resolution professionals. Now you can understand that there is a company, there is a corporate that took a loan. Now it is the company has taken multiple loans, some from the bank, some from the NBFCs. Now the company is not able to return the loan. So there are the creditors, okay? The creditors want their money back. The company is not able to pay back. So there is the resolution. Now the creditors, the financial creditors, let's say they have taken this company to the corporate insolvency resolution process, the creditors, the financial creditors, they have taken the company under the insolvency and bankruptcy code to the NCLT. So the application have been filed with the NCLT that this company is not able to pay back the debt, and the debt is of 10 crores. So it is more than 1 crore rupees. Okay. So the NCLT will approve this application, will accept this application, and then the resolution professionals, they are appointed to conduct the whole corporate insolvency resolution process. So this whole process to get the money from the company to pay to the debtors, to pay to the creditors, sorry, to get the money from the debtors to pay to the creditors, this whole process is conducted through the resolution professionals. They are the professionals that try to resolve the issue, and they are appointed to conduct the corporate insolvency resolution process. Once CIRP begins control of the company, it shifts from the debtor to the creditors. Generally, it happens that whenever the CIRP begins the control of the company, it shifts from the debtors to the creditors, basically to the resolution professional on behalf of the creditors. The committee of creditors. Now there is the committee of creditors because there are multiple creditors that have given the money to the corporate. So the committee of creditors, it comprises of all the financial creditors of the company, takes key business decisions. So this committee of creditors, it takes the business decisions and select a resolution plan. So resolution professional provides different plans that we can change the management of the corporate, and the corporate will start functioning better, and in the coming 2 to 3 years we will be able to retrieve the money. Or another plan is to restructure, like to sell the subsidiary, to sell the basic assets, and to restructure the functioning of the corporate, and we will be able to gather the money within 1 to 3 years. Okay, so this is like the resolution professional provides different plans for resolution of the corporate so that the money can be retrieved from the corporate. Okay, the resolution plan outlines how the debt of the company would be restructured or settled, like how much more time can be given to the corporate so that it can pay back to the creditors. Okay, or how it can be restructured, the interest can be reduced, the time of retrieving the money can be increased, as well as the management of the company can be restructured, the management of the company can be changed and such, in order to revive the company. If a resolution plan is not approved within a specified time, or the creditors committee of creditors determines that the company cannot be revived, it is too much of an effort, the NCLT orders the liquidation. Okay, so that is the idea. Now, if the liquidation, under the liquidation, assets of the company are sold, and the proceeds, the money that has been gathered by selling the asset, are distributed as per the specified order, and the company is wound up. Okay, so the corporate, basically it is not, we are not able to revive the corporate, we are not able to gather the money, the plan cannot be formed for this corporate because it is so much down under the water, and that's why we have to liquidate the corporate to get the money for the creditors, to get at least partial money for the creditors. Okay, so the company is wound up. NCLT appoints a liquidator to manage the process of liquidation, selling the assets and such. The resolution professionals and their agencies are regulated. The resolution professionals, their agencies, they are regulated by the Insolvency and Bankruptcy Board of India. That is the regulator of this Insolvency and Bankruptcy Code. Now, appeals, if you are not satisfied with the decision of the NCLT, if the corporate is not satisfied with the decision of the NCLT, appeals against NCLT lie before the National Company Law Appellate Tribunal. So there is also appellate tribunal that is present. This is the whole process that I have explained you, just so that you have the clarity, because now we are going to discuss that what are the key provisions, what are the key changes that have happened. So now you will have better clarity that, okay, which authorities, which resolution professionals, they provide the resolution. Committee of creditors is formed of the creditors that have given the money to the corporate. NCLT is the adjudicating authority that looks after the whole process. Okay, so now let's see the key provisions of the Insolvency and Bankruptcy Amendment Bill 2025 that has now become the act. Okay, what happened? NCLT appoints what? Okay, we will see this. You will get better clarity now. The key provisions now we are going to discuss. So, adjudicating authority, that is the NCLT, shall within 14 days of the receipt of the application, if the NCLT has received the application from the financial creditor, operational creditor, or through the debtor, that the company, there is the CIRP process that is required, corporate insolvency resolution process that is required. So NCLT within 14 days of receiving the application by an order admit the application if it is satisfied that the default has actually occurred and the default is of 1 crore or more than that, and the application is also complete and there is no disciplinary proceeding pending against the proposed resolution professional that is proposed for this particular corporate insolvency resolution process. So within 14 days of receiving the application has to be admitted and accepted by the NCLT for the corporate insolvency resolution process. Remember this very carefully. Withdrawals. Now the bill or the act allows the withdrawal of an insolvency application. Let's say the financial creditors or the operational creditors, they filed the application for the corporate insolvency resolution process for a corporate. Okay, now they feel like that out of the court they can handle the situation, and they have talked to the corporate again, and the corporate is ready to take certain actions that the financial creditors or the operational creditors want. So the act allows withdrawal of an insolvency application only after the committee of creditors they have been constituted, and the committee has been constituted and before the first invitation of the resolution plans. So basically the bill allows withdrawal of the insolvency application once the committee of creditors has been constituted and before the first invitation for the resolution plan. Okay, such withdrawal would require 90% approval of 90% of voting share of the committee of corporates. That's why committee of creditors, it is required committee of creditors 90% of the voting share in the committee of creditors, they should agree for this withdrawal of the insolvency application. I hope this is clear first of all. Okay. So the bill allows withdrawal of an insolvency application only after the committee of creditors has been constituted and before the first invitation of the resolution plan. Such withdrawal would require the approval of 90% of the voting share of the committee of creditors. That 90% of the committee of creditors, they should agree that have the voting share. Okay. The bill also allows withdrawal of voluntary liquidation. Let's say the debtor itself, the corporate, that is the debtor itself, went to the NCLT with the application for the voluntary liquidation. Now the bill allows withdrawal of voluntary liquidation by a special resolution of shareholders. The shareholders of the company, of the corporate, they should agree, and the creditors representing 2/3 in the value of debt, they should approve this kind of resolution that okay, voluntary liquidation can be withdrawn. Okay. So this is the idea. The bill also allows the withdrawal of voluntary liquidation by a special resolution of the shareholders of the corporate, that is the debtor, and the creditors 2/3 in the value of debt. Such creditors, they should agree. So let's say this is the total debt. So majority of the creditors that has the value of debt, the majority of the value of debt, they should agree. Okay. They have approved the resolution for withdrawing the voluntary liquidation. That is the idea. Next is committee of creditors role in liquidation. So the bill empowers, the act empowers the committee of creditors to supervise the liquidation. The bill also provides that the resolution professional will not be appointed as the liquidator automatically. The committee of creditors, by a vote of not less than 66% of the voting share, resolve to replace the liquidator. So if the committee of creditors, they want to replace the liquidator, they can replace the liquidator with the voting share of 66%, not less than 66%. So at least 66% of the voting share committee of creditors, they should agree for the replacement of the liquidator. Where the committee of creditors resolves to replace the liquidator, it shall apply to the adjudicating authority, that is NCLT, for the appointment of the proposed liquidator that is proposed by the committee of creditors. So what we have understood, that NCLT, once receiving the application for the CIRP, has to approve it, admit it within 14 days if all the conditions are satisfied. Okay, withdrawals, the bill allows withdrawal of the insolvency application if the committee of creditors has been constituted and it has not received the resolution plan till now. Such withdrawal would require 90% of voting share creditors of committee to approve such withdrawal of insolvency application. In case of the withdrawal of voluntary liquidation, if the company before voluntarily wanted to liquidate, but the company now do not want to voluntarily liquidate, so withdrawal of voluntary liquidation by a special resolution of the shareholders of the corporate of the company, and two-third of the value in the committee of creditors or the creditors, two-third of the value. In the case of withdrawal of voluntary liquidation by a special resolution, two-third in the value of debt, two-third in the value of debt. Such kind of creditors that have two-third in the value of debt, they must agree within 7 days. Now, COC's role in liquidation. The bill empowers the COC Committee of Creditors to supervise the liquidation. The bill also provides that the resolution professional, they do not have to automatically become the liquidator, and the COC, by a vote of not less than 66%, at least 66% of the voting share Committee of Creditors, they can replace the liquidator with another insolvency professional. Okay, that is the idea. Any confusion, anyone? Now, moving forward with the timelines for liquidation, NCLT must pass the order for liquidation within 30 days from the date of receipt of the application. It also specifies that liquidation proceeding, the selling of the asset, must be completed in 180 days, within 180 days, extendable by up to 90 days. Okay, within 180 days, the liquidation proceeding should be finished, and this time period is extendable by maximum up to 90 days. Further, voluntary liquidation proceedings must be completed within 1 year, and if there is withdrawal of voluntary liquidation, then what will happen? The withdrawal of voluntary liquidation is allowed by a special resolution, and two-thirds of the creditors, they should accept this. Okay, then only the withdrawal of voluntary liquidation can happen. So voluntary liquidation proceedings, they must be completed within 1 year. If there is withdrawal of voluntary liquidation, that is also allowed with the special resolution of the shareholders of the company, and two-thirds of the creditors, they should also approve within 7 days. Now, introduction of CIRP, this is important. The bill or the act introduces an alternative process called creditor-initiated insolvency resolution process. So this is creditor-initiated insolvency resolution process. This must be concluded within 150 days. The time period is extendable by up to 45 days by a vote. Now this time period will be extended by 45 days by a vote of at least 66% of voting share of Committee of Creditors. Okay, Committee of Creditors, they may decide at any time to convert the creditor-initiated insolvency resolution process into the simple corporate insolvency resolution process under the NCLT, and seek an order from NCLT for that conversion. So creditor-initiated insolvency resolution process, this is initiated, or this can be initiated, and this can also be converted into CIRP. Okay. Now, CIRP is different from the CIRP. So, the creditor-initiated insolvency resolution process, this is different from the corporate insolvency resolution process in the following manner. First of all, the CIRP, it may be initiated only by specified financial creditors that belong to such class of financial institutions as may be notified by the central government. So, CIRP, this particular insolvency process can be only initiated by specified financial creditors. Okay, it is to be initiated with at least 51% of the notified financial creditors agreeing to the initiation of this unique process, and during the CIRP, management of the company will remain with the debtor only, subject to oversight by the resolution process. So this is the creditor initiated insolvency resolution process. Okay, that is usually considered a faster process, because this is creditor initiated, and usually it is not coming directly under the complete domain of the NCLT, and it is a unique process that is being followed. Okay, that is the idea. Any confusion? And whenever we are saying by value or voting share, so basically you can understand that there are creditors. Let's say this corporate has taken the loan of 100 crores. The creditors, from one creditor 50 crore, another creditor 5 crore, another creditor 20 crore, and another creditor 15 crore. So voting share will be equal to all the in the committee of creditors. In the committee of creditors, will the voting share be equal? Will the voting share be equal? Another creditor 5 crore, another creditor 20 crore, and another creditor 15 crore. Voting share will be equal. What happened, Swami Arora? Is there any problem? I think voice is clear, not? Okay, so voting share will not be equal for sure. Now, 50 crores, if the creditor has given 50 crores, it will have a higher voting share. Then the first highest voting share will be for this creditor, then the second highest voting share, then the third highest voting share, fourth. Okay, so this is the idea that the voting share, it basically depends upon how much loan has been given, how much credit has been given by a creditor, So that is the idea. So 66% of voting share means that 66% of the value of debt, 66% of the value of debt, creditors, they should agree. That is the basic idea. Now, coming to the next point, that is cross-border insolvency. This is another very important point. The bill contains an enabling provision empowering the central government to prescribe rules for administering and conducting cross-border insolvency proceedings. So the bill contains the enabling provision so that the bill can be empowered, the act can be empowered, so empowering the central government to prescribe rules for administering and conducting the cross-border insolvency proceedings also. So this is a very unique idea that has been provided, and the central government now has the power to prescribe rules for administering and conducting the cross-border insolvency proceedings. Let's see that how it comes out, if the central government will make the rules or not. But for now, the amendment has enabled the provision empowering the central government to prescribe rules for administering and conducting cross-border insolvency proceedings under the Insolvency and Bankruptcy Code of 2016. Group insolvency, the bill empowers the central government to formulate rules for conducting group insolvency proceedings. The rules may provide for a common bench for such debtors, coordination between the proceedings and common insolvency professionals, and a committee of creditors of the debtors. Okay, a committee of, see, if there is a group insolvency that is happening, that means there are different debtors, maybe from the same group, for which a common proceeding is going to happen, and there for this particular corporate or for this particular subsidiary, let's say there is a committee of creditors, for this particular another committee of creditors, for this committee of creditors, for this committee of creditors, for this committee of creditors. Now because a single proceeding is happening for the whole group, so there will be a committee of creditors. Okay, this is the basic idea. So group insolvency, the bill empowers the central government to formulate rules for conducting group insolvency proceedings so that multiple proceedings can happen together. The rules may provide for a common bench for such debtors, coordination between the proceedings and common insolvency professionals, and a committee of creditors of the debtors. Okay. Now, assets of guarantor. Coming to the last point, that is assets of guarantors. So bill enables a creditor who holds a security. Let's take the example first. So let's say company A has taken the loan. Now company A is the corporate that is on the verge of insolvency or that has become insolvent. Now the promoter, the guarantor, had given personal property as collateral. So company A, when the company A was taking the loan, the guarantor gave the personal property as collateral. Now bank takes possession because the company A has defaulted. It has defaulted. So the bank takes the possession of the property of the guarantor. Now during the CIRP, because the corporate insolvency resolution plan has been initiated, that this corporate is not able to pay back the loans of all the creditors or majority of the creditors, and so there is an insolvency process that is being run. So now during CIRP of company A, that property that was taken by the bank in possession, the property of the guarantor that was taken in possession, that property can be included in the resolution plan. The bank, it has agreed to include the property that it had taken under its control. The bank agrees to put this property under the resolution plan because the bank knows that if the bank itself sells the property, it will not be able to gather much amount. But under the resolution plan, under the corporate insolvency resolution process, maybe more money can be retrieved for this property, for this asset. Okay, but the committee of creditors, they must approve. So the act enables a creditor, it can be a bank, NBFC, who holds a security interest, that is the collateral, over the guarantor's asset. So basically, collateral that was given by the guarantor and has taken possession of that asset. So the bank or the NBFC has taken the possession of that asset under any law to transfer. Now this bank wants to transfer that asset as part of the corporate debtors CIRP. This can only be done with the approval of the committee of creditors, where the guarantor is also undergoing insolvency or bankruptcy proceedings. Approval from the grant, if C, where the guarantor, let's say this guarantor has also defaulted for the different loans that the guarantor itself has taken from the different creditors. So where the guarantor is also undergoing insolvency or bankruptcy proceedings, approval from the guarantor's creditors would also be required. So this is the idea. Basically, the guarantor's collateral, the guarantor provided a collateral that has been taken in possession by the bank. This can be included in the resolution plan, so that more money can be gathered through the asset, or for the asset more money can be gathered. But for this, the approval has to be taken from the committee of creditors, and where the guarantor is also under the insolvency or bankruptcy proceedings, approval from the guarantor's creditors would also be required. This is the idea. Any confusion, anyone? Now the last point is that time limit. So this is not a change that has happened, but just for your clarity, the corporate insolvency resolution process, this shall be completed within a period of 180 days. And if there is extension that is provided, it should not be more than 90 days. And the corporate insolvency resolution process shall mandatorily be completed within a period of 330 days from the insolvency commencement date, including any extension of the period as well as the legal proceedings. So basically, for the corporate insolvency resolution process, it must be completed within 180 days, extendable by 90 days. And if there are any legal proceedings also, all of the complete process should finish by 330 days. That is the idea. Okay. Now coming to the RBI cancels the license of Paytm Payments Bank Limited. So what has happened that the RBI through its order cancelled the banking license issued to Paytm Payments Bank Limited under section 22(4). So the license was provided under the section 22(4) of the Banking Regulation Act 1949. Now, consequently, the Paytm Payments Bank Limited is prohibited from conducting the business of banking. That means it cannot collect any deposits. The payment banks, they are not allowed to lend the money, but they are allowed to take the deposit up to the amount of 2 lakh per customer. Okay, so payment bank, that is the Paytm Payment Bank, now it has been prohibited from conducting the business of banking as defined in section 5B. Okay, so that is the idea. So basically, the Reserve Bank of India through its order has cancelled the banking license issued to the Paytm Payments Bank Limited, and consequently, Paytm Payment Bank cannot conduct any banking business. Okay. RBI will make an application for winding up of the bank before the High Court. Paytm Payment Bank Limited has enough liquidity to repay its entire deposit liability to the depositors upon winding up of the bank. So basically, the RBI is telling the depositors that they do not need to worry. The Paytm Payment Bank has enough funds to return the money of the depositors. Okay. Now the minimum required. See, there are certain criterias for the payments bank to fulfill. They need to have the minimum minimum paid up equity capital for opening a payment bank is 100 crores. So this is the minimum net worth required for the payment bank. For the first 5 years of commencement of business, the promoter must contribute at least 40% of the paid up equity capital. Deposit limit is 2 lakh per customer. Payment bank are the result of the recommendations made by Nachiket Moore Committee, and Paytm Payments Bank is one of the payment bank that also follows these conditions. It also cannot lend. Okay. Now, the Reserve Bank has cancelled the license of the Paytm Payment Bank Limited because of these reasons. First of all, the affairs of the bank were conducted in a manner that was detrimental to the interest of the bank and its depositors. Thus, the bank is not complying with certain sections. Okay, the general character of the management of the bank is prejudicial to the interest of depositors as also the public interest. So basically, the general character of the management is not good because it is prejudicial. It is not good for the interest of the depositors as also the public. Thus, the bank is not complying with the provisions that stated that the management has to work for the interest of the depositors and the public interest. Okay, no useful purpose or public interest would be served by allowing the bank to continue as envisaged in the section 22(3). So as per the section 22(3)(e), the public interest will be served by grant of license to the company to carry on banking business in India. So basically, the requirement is that whenever the license is given to a bank, whenever a license is given to a company to carry the banking business, the public interest should be served. That there are more banks, so there will be more banking services that can be provided, more financial inclusion that can happen. So whenever a bank is being established, basically the public interest will be served by granting of license to the company to carry on banking business. Now, no useful, it is said that Paytm Payment Bank, it is not serving any useful purpose or public interest. So that's why allowing this bank to continue is not required. So no useful purpose or public interest would be served by allowing the bank to continue operations as it is not serving any public interest. The bank failed to comply with the conditions that is stipulated in the payment bank license issued to it. That means it has to maintain the net worth criteria. It needs to maintain the CRAR of 15% and such. So there are certain criteria that a bank has to follow when it is getting established, and after establishment also it has to maintain its net worth and such. So bank failed to comply with the conditions that were laid down while providing the payments bank license to the Paytm Payments Bank. So these are the reasons that why the license was cancelled. First of all, the affairs of the bank were conducted in a manner detrimental to the interest of the public. The character of the management of the bank was prejudicial. No useful purpose was being served by the bank, and the bank failed to comply with the conditions that were laid down while providing the payment bank license. I hope this is all clear. Okay, any confusion here? Previously, the bank was directed to stop onboarding of new customers with effect from March 11, 2022. Thereafter, on January 31st, 2024 and February 2024, certain business restrictions were also imposed on the bank. Now, it has which disallowed any further deposits, credits, top-ups in existing customer accounts. Okay, that is the idea. So basically, it is not that suddenly Paytm Payment Bank license has been cancelled. It is not a sudden decision. The RBI is trying to tell that since 2022, the RBI has been taking steps against this institution, and the onboarding stopped in 2022, and the deposits and such, they were stopped in 2024. Okay. Now, any confusion, anyone? Any confusion, anyone? So this is the first question. I hope you will be easily able to answer this question. As per the Insolvency and Bankruptcy Code Amendment Bill 2025, which of the following statements is or are correct in regard to the creditor-initiated insolvency resolution process? So these are the statements. Now you have to tell that which of the following statements is or are correct. Okay. Chalo. Coming to the second question, the adjudicating authority, that is NCLT for the corporates, and it is the debt recovery tribunal for the individuals and partnership within dash days of the adjudicating authority, within dash days of the receipt of application, admit the application if it is satisfied that a default has occurred and such. And the default should be of minimum how much? I hope you remember. In the case of corporates, the default should be how much? Now, any confusion, anyone has? Do give me the right answer of the homework questions in the comment section below. Okay. And this is it for today. Thank you everyone. Thank you for joining. I hope you understood the points, and if there is any confusion that you can ask in the comment section below, do give the right answer of the homework question in the comment section. As well as I have informed you about the basics of the IBC also, Insolvency and Bankruptcy Code. The process I have explained you briefly so that you have the idea about the discussion. Okay. Chalo. Thank you everyone. Thank you for joining.